All right, welcome back to today's Lunch of the Market. The chip names look absolutely terrible today. Micron, Nvidia, Cirrus Logic, Intel, they all actually look terrible. All four names have about the same basic 5-day chart. Starts in the upper left and goes to the lower right. That's a bad sign, as Dennis Gartner would say. All right, we have protected puts on a small position in Intel, which is ticker symbol INTC, and we're long some put butterflies on MU, that's Micron, thanks to some great work by Steve Grasso on Fast Money when he pointed out that Micron keeps basically bumping its head up against $12 and then failing. So, in preparation for that, we're long the 12, 10, 8 put butterfly, which basically means we have a long put spread from 12 to 10, and then a short put spread from 10 to 8. All right, Cisco has basically the same 5-day chart as the other names as mentioned, but it's managing to trade just barely in the green today. Look, it's tough to short Cisco, even though the stock has been hated for about $10 a share, because the valuation is so compelling here that value managers seem to constantly be providing some kind of bid underneath the stock. And so while there certainly was a short from around 26 to now, it doesn't seem like there is one now. And even though a lot of smart people are getting into the name on valuation, because we don't see a catalyst, we're not going to buy the name and we're not willing to sit around and wait until one comes, which is what these other managers are doing. I totally get the case. Cisco trades at a ridiculous valuation. They pay a small dividend. It's probably not going to drive its company off a cliff, but John Chambers' execution has been lackluster as of late to be nice about it. All right, so what is on our radar today? NTAP. Uh, NetApp is the name of the company. NTAP is the name of the ticker symbol. So either way, you can NTAP. All right. At one point, the stock was down $2 a share today on absolutely nothing that we could find material. So you can probably guess how this goes, right? We go in there, we sell put spreads, the stock bounces, and of course, that's exactly what's happened. You guessed it. All right. So we're now short May 45.40 put spreads. That means you're short the 45 strike, long the 40 strike against it as your protective put. We could have taken smaller premium for doing it on a lower strike, but the strikes on May were 42, 40, and 35, and we didn't exactly want to have a $7 wide put spread or a $10 wide put spread on NTAP. So we settled for the 45.40, and we were rewarded for $1.20 per spread. You know from us that we usually like to get more than $1. If we sell a put spread, we got $1.20. Not bad, right? So we'll take the chance, being about $1.50 away from the strike that we sold. Stock's trading around 46.5 right now. All right, we did come across some unusual options activity as Option Monster put out a note on the AP wire saying that there were 8,000 contracts sold in the June 60 strike. Okay, so somebody sold June 60 calls. We don't know whether they were naked. We don't know whether it was a covered right. Well, let's take a look at it. So with the stock trading around 46 and change, it's unlikely that the seller will have to be worried about their options until the stock rises 29%. But one of these high flyers, it's hard to make a bet like that without a hedge. It's possible that the large holder of the stock is a mutual fund, a pension fund, or a hedge fund that actually bought somewhere around the middle or first week of February when the stock was actually trading at $60. In this case, they're actually getting obliterated right now in the trade. And so to save some kind of face, they sold 55, the largest seller sold 5,500 calls at the 60 strike in June in one transaction. Okay, one seller, boom, 5,500 calls. That comes out to about $209,000. Now, how this trade might work is the person who's long 550,000 shares, which would mean it'd have to be a pension fund or a mutual fund or a hedge fund to have that kind of volume, that kind of size. The stock would trade up to 60, they'd get called away, they'd make $209,000, and they'd turn their massively loser bet into not a bad trade at all, right? On a percentage basis, it's not terribly terrific, but on a dollar basis, $209,000 is more than actually probably everyone listening to this broadcast will make all of this year, maybe even all of this year and next year. In fact, the majority of America won't make 200,000 in the next 4 years. So it's not a bad bet if it works out the way that this call seller, as we're calling them or imagining them. Okay, so that's what we're thinking about. In terms of the trade, it might actually be a nice little gamble to get in there on that 60 strike because we think that that call seller, if they're long the underlying stock, actually wants the stock to get back up to $60. And so that 38-cent call might turn into a 60-cent call or a 75-cent call, at which point you making an out of the money, completely speculative play. Could be up 100% on your spec trade. Now, keep in mind this is highly speculative. The stock is like $14 away from that strike price, and you will lose everything if the stock isn't above 60 by expiration. But a $5 move between now and June expiration might actually get you a nice little rate of return that you can take that sucker off quick, regardless of whether stock actually gets to 60 by June expiration or not. So keep that in mind. Again, our trade, we sold those 45-40 put spreads against where the stock is trading today. We got a $1.20 for that. And we just need the stock to stay above $45 a share by actually by May expiration. So we don't really care what happens between the buyer and the seller of this extremely large position, because we just need the stock to stay above 45 bucks a share. That's how we play it over here at Magnum Opus Financial. Now, we did find when we were looking for news that Dominion Enterprises employed the NTAP product solution along with VMware's virtualization software and some of Cisco's equipment to actually make their company more efficiently. So if anything, the only news that we could find on NTAP is that somebody was buying their service. So take it for what you will. That's what we can make out of it. All right, it's not about making home runs all the time. Although they're nice when they happen, what we want to do is consistently be profitable on the majority of our trades and make sure that the bad ones don't blow us up. That's by keeping the position size appropriate and always keeping cash on hand to do trade repair should the trades go against us. Tomorrow we have two guests on America's Favorite Traders that you have never heard on America's Favorite Traders before. We're extremely excited about tomorrow. It's going to be fantastic. Don't forget to keep a lookout for the new episodes. You can always get them automatically sent to you if you subscribe to our podcast on iTunes. Just go on iTunes, search for America's Favorite Traders, boom, subscribe, or you can go on MagnumOpusFinancial.com, click on the big AFD button, select any episode, and on each one there's a link to subscribe to the podcast on iTunes. Also, don't forget you can now get Lunch of the Market in both live, video archives on YouTube, and the print editions from StockPicker.com by going to MagnumOpusFinancial.com/lunch. All right, thanks for tuning in again today. Have a wonderful afternoon, and we will see you tomorrow.